Hello, welcome to FountainFX. This is Thursday the 12th of December 2013. We're looking at the US dollar against the yen. As we can see, price on the weekly chart, price has come in where it is now back into the area where price was previously hit major resistance and fell significantly. This is at the 103 level, and we can see that price came all the way down to below the 95 area, so a good 800 points fall. Price has now taken the last 6 months almost to actually get back up into that area, so it's still pushing up, and the MACD in this instance is saying this is the time you want to be going long, because it's actually saying price is now in an uptrend as from the beginning of December. So we're sitting there looking at an uptrend and on the weekly chart. So now let's just take a look at what it's saying on the daily chart. And on the daily chart, it's contradicting what's saying on the weekly chart, which is the daily chart saying it's actually showing a decline in momentum, which you'd expect at resistance. You would expect that at resistance. So we are at a major point of resistance, despite the fact that the weekly chart's saying we're in an uptrend. We obviously are, because we had to go in an uptrend to get to resistance in the first place. But now the daily chart is saying, look, be aware of this. We've got a double top formation, which happened here. At the same time as the double top, the actual MACD histogram was declining. So we've got a MACD divergence. Price is doing the opposite to what momentum is doing. So there's a decline in momentum. And just simply based on that, a simple strategy of the MACD divergence, that would say short sell. Enter a short around about here. So if price gets back up into this area, you can short, you can sell. You would put a stop just above this area just to protect your loss, potential loss. Either that, or what you can do is you can wait for confirmation, which is we've now plotted a trend line on the lower lows to the lower lows, or higher lows, sorry, from the lows to the higher low here. We've plotted the highs across, and what have we actually created? We've actually created an ascending triangle. Well, based on an ascending triangle, we should expect price to break through this area of resistance and continue up. So maybe the MACD on the weekly chart is actually consistent with what we need to do, which is buy. But in here then, because we're getting conflicting information, we've got a MACD divergence which is saying sell, and we have weekly momentum which is saying buy. Well, you never buy at resistance. You buy a pullback to resistance, which becomes support. So because this is a significant area of resistance, what we will be doing before it breaks this area is we'll be looking to sell. On the other hand, if price then breaks through and comes back down to this area of resistance, making it support, that's the time when we would then look to buy and go long. So that's really an analysis of the US dollar against the yen. Happy trading, and I hope this is helping in terms of strengthening your way of analysing the markets and looking for opportunities to take profit. Thank you from FountainFX.